Hi there, welcome one and all to our live webinar with us from Phillip Nova. And what are we going to discuss today? We're going to discuss the great opportunities ahead in 2023. And who do we have in the studio to share these wonderful insights with us is none other than our dear friend Ming Lam, the Deputy Head of Research for Asia for Trading Central, and he will discuss promising investing and trading opportunities in various asset classes, including stocks, forex, and commodities, amid all the events that's happening around us. All right. So, just to sum up what we intend to cover today, we will cover we will cover what is happening in the first quarter. We have many significant events. Fresh on our minds is the Silicon Valley Bank collapsing. Inflation is showing signs of easing, and the US Treasury yields are retreating rapidly. And investors like you and I are watching closely if the US Federal Reserve will eventually pause its recent rate hike cycle, which is at the fastest pace in decades. Meanwhile, the relationship between the US and China remains tense. What impact will these major events have on market trends, and how should investors adjust their investment strategies? And in this webinar, Ming Lam will discuss both from a fundamental and technical perspective, potential opportunities which you should keep a keen eye on. All right, Ming Lam, if you're all set to go, um, um, I'm going to give you the reins. But just before that, we're going to have few words from a colleague of Ming Lam's, also from Trading Central. We have Rebecca to walk us through the trading tools that we have on the Trading Central platform. All right. So these are trading tools which you can easily access via Phillip MT5. All right. But before we kick things off, can I just do a quick check if you can hear me loud and clear? I'm just going to launch a poll. You should see a poll on the screen. All right, excellent. Thank you for confirming that you can hear me loud and clear. Thank you so much to our wonderful audience for verifying that. All right, so Rebecca, if you're all set to go to walk us through the various tools that you have, I'm just going to give you sharing rights.
Thank you. Right, so today I would like to, this is Rebecca. I'm the Trading Central Client Success Manager. And today I would like to introduce quickly about what we have with Phillip Nova with the MT4 plugin and how this can actually help you to trade. So if you go to Phillip Nova website and go to platform, you can find this page where if you click on TC indicator, it will brings you to the download page. Just click on download and follow the steps. You shall see our indicator on your MT5. So once you have installed it, you should be able to find it on the left-hand side. For demo purposes, I've already logged into the MT5, and once I just drag and drop the indicator to the right-hand side, I'm able to see it. So for our indicator, it's very important because we have our house view already been shown that what is our preference of it. If we would like to see in details, we can read it in here, and we have a timestamp in here as well. So I want out to our free, since its preference is rising, this is actually our target price. And for pivot point, it means that once the price touches the pivot points, the market environment might change upside down, and therefore pivot point is always suggested to be a stop loss point. And S2 S3 is once the market environment change, that is the new kind of target price after. Okay, you can also have candlestick as well as ADC. which is different indicators to help with your trading. For example, if you just drag and drop candlestick onto the right hand side, we automatically detect 16 different kind of candlestick that we find that's useful, and can help you with your trading. Okay, so there are ADC as well, which is basically combining RSI and MACD together. It really depends on if you're a candlestick person or you're more like a RSI or MACD person. On the other hand, we do have expert advisor as well. If you click on Trading Central, double click onto it and click on OK again, you shall find our products in here with Forex feature ideas, economic insight, and TC Market Buzz. So I will recommend you to just take a look at TC Market Buzz, which is basically a news analytical tools, which helps you to read our AI actually reads all the all the news of the different kind of equities or currencies, and then help you understand what is the sentiment of it and how buzzing or how hot this news right now. So once you click onto it, you can see different um, news that's being discussed about this topic. What is the most discussed topic as well? And this is a trend analysis from our analyst team. So it helps you have a general understanding, right? What is being the hottest kind of forex pair of different kind of product right now, and then you can um, go back to our analyst views to really check, right? So with this kind of hot topic right now, is it a good time to trade? Let's say if you are more a calendar driven, event driven kind of person, you can always look into economic insight as well. So for this product, we analyze the different kind of the different kind of events. So for example, on the left hand side, these are the dates. You can figure out the importance as well and different countries, but I'm just going to stick with high importance. And let's say I would like to look at the confidence, consumer confidence level. Once I click into it, I'm able to see what's all the different kind of price and everything, and then I can see um, if I check at the price chart, I'm able to find historically what's happening with this event and what's the correlation between the event and the price. And if I click into volatility, I can then understand, for example, 5 minutes after the event, historically, what actually happened. So 60%, as we can see in here, 60% ended in bullish 5 minutes after the event, and 30% ended in bearish. It gives you kind of a probability what's happening right there. Let's say I can actually look at different time frame as well, say 15 minutes after. We can see that 15 minutes after, 80% actually ended in bullish. So this is a very good indicator and it gives us a very clear direction of how we can actually trade with a different event. Okay, so let's say now there's not much event or not much news I'm interested in, but I would like to know what's kind of the different ideas I can find. I can click on Forex feature idea and click on custom settings. You can choose all the different kind of currency pairs that you're interested in. Um, and you can just using the symbol of that. And once you click on it, I would recommend you, there are different filters, including bar sizes, the holding time frame that you want it to be. But I will always recommend you to use classical patterns on the technical charts. You can also use other things as well. For example, trend, which is one of my favorite. You can choose depends on your preferences and click on done what is um, created, then it will find up to 10 ideas based on your settings, what kind of ideas there is. So for example, I can see this the US dollars to British pounds, and we form this kind of diamond bottom pattern, and its target is adding 5 pips, and it's very special because only classical patterns will give this kind of a target price for these special characteristics, and it's very strong reversal signal as well. So it's one of the most actionable reversal pattern that you can find. So it tells you during what time frame or what is the target price and what is the range of it. You can read the details on the right hand side as well, or on the chart. So it's very easy to understand. So now it's saying on 20th of April at 8, on a 1 hour chart, we can find a up to 2 weeks in the range of the target price of 0.81 to 0.82. So let's say if I'm interested in this to trade this kind of forex pair, this is actually might be a good chance to enter the market. So the above is really just a very short introduction of how trading central tools can help you with, and we strongly recommend you to just download the indicators and just try it on your MT5, and hopes that it can help you to earn more in this high volatility market. Okay, thank you. Now we'll have our head of Asia Pacific analyst Ming to help us to do a start our webinars today.
All right, thank you so much, Rebecca, for walking us through the various tools that we can find on the Phillip MT5 platform by courtesy of Trading Central. And Ming Lam, if you're all set to go, the floor is yours now. Let me give you presentation rights.
Hey, hello. Thank you, my colleague Rebecca, and thank you, Sri. And ladies and gentlemen, welcome to our webinar today. And good morning.
Hey Ming Lam, we lost you for a moment. All we heard was good morning. I assume we are somewhere with a very different time zone from what we are experiencing right now.
Okay.
Yeah, are you back online? Yes, Ming Lam.
Can you hear me now?
Yes, I can hear you loud and clear, Ming Lam. Over to you, Ming Lam.
Okay, thank you very much, Sri. And I have to say again, good morning, good afternoon, or good evening, depending on where you are. I am Ming Lam, working for Trading Central. I'm working in Hong Kong. Okay, now we are here at I think 7:10. Okay, 7:10 evening time. And first of all, I would like to wish Phillip Lover a very happy 40-year anniversary. And we, Trading Central, have been in cooperation with Phillip Lover for a couple of years, mainly on webinars. We try our best to bring in more information and more insight to help our investors to navigate the market. And today, well, you can see I'm showing the Phillip Lover MT5 platform. Today, most of the assets, stocks, forex, commodity, you can find corresponding trading instruments on this Phillip Lover MT5 platform. Okay, so it is my target to finish this webinar before 7:45, and I will try to be very concise and to the point, and make it very useful to your trading decision. Okay, let's start now. For those of you who have been following my webinars, you know that I like to put my conclusion at the front. Okay, well, very simple, very simple. Today we are talking about U.S. inflation is slowing down, and we are going to see that we are quite sure the Federal Reserve is going to stop rate hike. Okay, so recession, banking crisis, we will talk about that, and I will give you an answer. Yes, we are having a recession. Banking crisis, well, we have some concerns, but nothing, not very much to worry about, I can say. Okay, QE. It seems that we are now in QT, quantitative tightening, but I can say we are going to see QE, okay, quantitative easing again, which is a bullish for stocks. Okay, And big tech. In fact, today's webinar is a kind of a follow-up to our webinar in January. Oh my goodness, 3 months ago. Quite a time, right? Quite a while. Okay, so it is kind of a follow-up to that webinar. And January webinar, we talk about big tech stocks. Okay, we will do some follow-up. Don't worry. And also we will talk about the forex market, the US dollar, and of course, most of you will be interested in also gold. Okay, all right. So again, I promise I will make it very concise and very useful to you. All right. Okay, let's start. Now, this is today I have a lot of charts, about 20 charts, which you will like. Okay, and charts on the trading instruments. And on macroeconomics, I will also talk about it, but it will be very, very concise and to the point. And in fact, luckily, fortunately, most of the economic factors that we have been talking about through our webinars are still valid. Okay, so let's go. Now, this is the rate of the speed of the Federal Reserve aggressive rate hike last year, 2022. You see, this is very steep. It is the most aggressive rate hike schedule in 40 years, in 4 decades. And now the Fed fund rate is around 5%. I know that currently the financial media is already talking about, well, we are going to see another rate hike in May, okay? But let me tell you, to me, it doesn't matter because we can see that the Federal Reserve, the central bank, is going to stop. It has to stop. Why? Inflation rate, US inflation rate. This chart has been consistently on the down move. You can track this chart for my several previous webinars. They keep the interest rate, the inflation rate, CPI keeps falling. Now, last year in June, it was at the peak of 9.1% year on year. Okay, at that time, well, rate high, and okay, 75 basis points, okay, and it was crazy. And now, just the latest CPI was just 5.0%. Okay, you can see every month dropping. Okay, we are going to see. I'm quite confident to say that inflation rate, U.S. inflation rate, will drop further. Okay, not coming back, not bouncing back. Okay, currently the most sticky factor, we say the sticky factors in the CPI is the rent and labor cost, labor wage. Okay, and those factors will also going down. Okay, no worry about that. So next one, I saw this chart, a similar one before, and the yellow one is the ISM manufacturing PMI, okay, recording the manufacturing activities in the US. And the blue one is the last 100 year-on-year change. Okay, and you can see that these two charts just develop. They are hand in hand. And at this one, the blue one, I want your attention at this area. The blue one, less than 100. Well, it drops quite heavily last year, as you can see. This is the growth rate, okay? Growth rate of the less than 100, and it may imply that the ISM manufacturing PMI will go below 40. As you know that below 50, it is contracting. And are we going to see a reading of the yellow one the yellow line below 40? I think so. I think so. So below 40, well, it is already a recession reading. A recession reading. So many friends ask me, hey Ming, we are going to be in recession, and I tell them we are already in recession regarding the US. And so would it be bad for the stock market? I say no. I say no. Well, in recession, and central bank, Federal Reserve, can no longer be able to raise interest rate, and we are going to see QT will be stripped back to QE, which are all beneficial to stock trading, to stock investing. Okay. Now, this one is a new chart to you, maybe, and I can say that this chart is the most important macroeconomic chart for today's webinar. I'll tell you what it is. The white line is central banks, the major central banks around the world, the M2 money supply, okay, including the Federal Reserve, including the Bank of England, Bank of Japan, People's Bank of China, blah, 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 the major central banks. This is the, we can say the liquidity or money supply, okay? And the pink one is the Nasdaq 100 index. As you can see, it almost, well, they are superimposing with each other. And with the drop in liquidity, with the drop in money supply, last year, 2022, we see the Nasdaq 100 dropping 30%. Okay, now, so we look forward. And now we can see money supply around the world is rebounding. Can you see that? The white one. And we are seeing also signs of rebounding of the Nasdaq 100 index. It means the stock index. Okay, I will keep tracking this important chart. Okay, if we see global money supply or liquidity keep increasing, keep rebounding, we don't worry about the stock market. The stock market will also keep rebounding. Okay, so I will keep track on this one for you. All right, so now we start our journey with my 20 charts for this webinar. And this is Nasdaq 100 Index, MDX, which, I remind myself this one. I have to remind you that for all those charts following, we are going to use weekly chart. It is a one bar represent the trading of 1 week, okay, 5 days, okay. In fact, this chart is not updated. This chart was shown to you in our last webinar in January. Okay, at that time, I said this level, 13,000 for the Nasdaq 100 index is a key resistance. Before this level is broken, is surpassed again, we were bearish, and maybe the nearest support is 10,000. At last, finally, it didn't happen. And I mean, the Nasdaq 100 index did not fall to 10,000. In fact, it rebounded back to 13,000. All right, now this chart is the updated chart, okay? We can see a channel, downward channel has been broken. All right, and year to date, from the start of the trend 2023 to now, 3 months and 20 days. Today is April 20th. 3 months, over 3 months, the year to date rebound extent of this index is 19%. Not bad, and we expect it to keep rebounding, and 16,700 is the record high for this index. Okay, as you can see, these two subcharts, they are MACD, RSI Relative Strength Index. They are, as you know, my favorite index for momentum. Okay, now I have to say it again. We are using weekly chart. Okay, 5-day chart. Okay, now I give you some statistics. Year to date, Nasdaq 100, as I said, 19% upside already. S&P 500 index, 8%. Dow Jones Industrial Average, 2%. All right. So it is not difficult. It is not difficult for you to understand that I will favor tech stock, technology stock, particularly big tech stock going forward, as they are showing great momentum year to date. In fact, this kind of stock, technology stocks, they were we call them underdog. They were impacted seriously last year, and now this year, when the market, not just we can see the trend. The market see the trend of the central bank stop raising interest rate. This kind of stock, technology stock, they just keep rebounding because, as I say, the market can expect, or can see already the central banks, they are going to stop increasing interest rate. Okay, so Apple, it is the biggest market capitalization, market cap. It has the biggest market cap in the US. I can say around the world, 2 trillion market cap. Okay. Same, we are going to break about the declining channel, and remember, its record high is 183. It's not far away. It's not far away. You understand? Do you agree? Okay. I'm confident that we are confident that it will go back to its record high, 183, and go higher. And you can see the momentum indicators are favorable also. Okay, so this is a 2 trillion market cap stock, Apple, the biggest one. And do you know which one is the second biggest cap? Yes, correct. Microsoft. Okay, one point I have to point out, I forgot. Sorry. Can you see this is a weekly chart? The 20-week moving average is about to cross above the 50-week moving average. Okay, the thin red line is going to cross above the blue line. Okay, this is a bullish trend, and also similar pattern is showing up in the chart of Microsoft MSFT. Okay, can you see that? Already the 20-week moving average has already crossed above the 50-week one. All right, you can see rather the last 100 index, Apple and Microsoft, now they are showing similar pattern. Okay, a downward channel has been broken. Okay, now Microsoft is record high is 350. I'm confident that it is going back to that level easily. All right, momentum on the rise. Okay, now why I put these two stocks, Apple and Microsoft, at first? They are the biggest market cap. Okay, if you see Apple and Microsoft, these two mega stocks are doing well. They are holding up well. They are rebounding well. You can be rest assured the tech stock sector are doing well. Okay, this is our simple logic. Okay, and yeah, Okay, so go forward. Alphabet, the parent company of Google. Okay, similar. Okay, and before, did you buy on the dip when it dipped below 100? Okay, I think it is hard for it to return back to levels below 100. Right, and yeah, and we are seeing the overhead resistance. Overhead is 116, and then the next target should be on 128. Okay, so when you compare all these charts with the charts I showed in my last webinar in January, you will see a reversing pattern because they break the key resistance. They are rebounding, breaking the key resistance, and their outlook is turning to be bullish. Okay, and this is why I talk about the opportunities, the great opportunities going forward within this year. All right, so now, apart from the technical side of the analysis of these stocks, I also want to draw your attention to this one. Microsoft has invested in OpenAI, which has developed ChatGPT. We are going to have 4. We have 4 already. Okay, so also Google, Alphabet, they have their Bard AI. Okay, so this trend of technology will not be stopped. No one, no government, no organization can stop this trend. Do you agree? So as long as they are the leaders in this AI field, well, their prospect should be bullish. At the same time, apart from software, Microsoft making AI, Google making AI, and how about those infrastructure related to AI, artificial intelligence? I mean semiconductor. Yes, chips. Okay. Have you heard about this company? I also mentioned this company in my various webinars, previous webinars. Yeah, NVIDIA. Okay. Let's look at the chart. It is very impressive. Very impressive. Okay. It is a weekly chart. Have a look. Can anyone tell me what pattern? It is a very classic technical analysis textbook pattern. It is called inverse head and shoulder pattern. Okay, after crossing the lag line, this one, we are going to see the stock price rising, no doubt. Okay, and in fact, year to date, now this chart, all these charts are updated. Year to date, NVIDIA has already rebound 91%. Not rebound, I mean from year to date. Okay, starting from counting from the end of last year to now, it has already gained 91%, and record high is at 346. Okay, no doubt it will return to that level. Okay, this is NVIDIA. Okay, and in fact, last year I still remember within the tech stock were seriously impacted last year, and within the tech stocks, the semiconductor sector was the #1 victim, the biggest victim. And this year, it seems that the ChatGPT, and now everyone is talking about AI, artificial intelligence, all those related stocks are doing very well. Okay, including this one. Okay, and Tesla just released its first quarter result overnight. Okay, in fact, I do not see anything wrong, anything not good within its result. But you know what? The financial media, they always like to throw Tesla. Whenever it gives a record earnings, they will say, well, it is below expectation, blah blah blah. It is still not good. It is still not good. And in fact, the stock price of Tesla is very volatile, and but it has broken above the key resistance I showed you last time in January. So we have turned medium-term bullish on this stock. Okay, let's see if we can recapture the trend to 236 level. Okay, and the next level target will be 300. Now, many analysts are talking about the car side, automobiles production of this company, but as I discussed with you many times through our webinars, this company is not just a car company, not just an EV company. In fact, we are quite sure that this company will dominate the EV markets around the major car market around the world. At the same time, this company is also what? An AI company, a robotics company. And honestly, I do not see any other company can get very close to it. Well, some people, some investors, they still mention Ford Motor, General Motors, but if you look deep into the story, you will know that those car company, those we call them legendary legend car company or old car company, Ford, General Motor, BMW, Volkswagen. Well, they fall very backward when compared to Tesla. Okay, so Tesla can dominate the EV market, and also it is also engaged in AI and robotics software. Okay, so in short, I have high hope on this stock. Okay, so we will keep monitoring it for you. Year to date, it is up to currently 46%. Okay, and I have to say that I have to remind you that this stock is very volatile. And okay, we go to the next one. Meta platform. It is a parent company of Facebook. Okay, very good. The performance is very impressive. Also, year to date up 79%. Okay, and I have a look at this one. I mentioned before, the 20-week moving average has crossed above the 50-week moving average, which is a very bullish sign. Okay, momentum on the upside also. And for Meta, we are going to have another kind of knowledge about the metaverse. Okay, you know, as I mentioned, the technology, all kinds of technology, whether it's AI, robotics, metaverse, and even blockchain crypto, we are on high speed on these kinds of all these kinds of technologies. And one word, no way back, only forward. Okay. Now, talking about blockchain, talking about cryptocurrency, well, you know, I have to talk about this when we are talking about opportunities this year. However, due to some, I think we have some regulatory obligation or limitation, I will just show you the levels. These are not my target levels. They are factual levels. There is a record high at this one. 69,000 is the record high of Bitcoin. And then last year it dropped for 77%. Okay, and to a level around 15,000. And then from that level, we rebound 94%, over 90%. it is amazing. Okay, and now crypto, Bitcoin. I want you to ask yourself one question. Do you think Bitcoin, crypto will disappear? Will they be banned forever? Will they be, will they just vanish and never again? Okay, my answer is no, no, no. This will stick with us. Cryptocurrency, Bitcoin will be here for I don't know, long while. Okay, we can see that currently the U.S. authorities seem not very favorable to Bitcoin. However, look around the world, in the UK particularly, in Europe, France, and in Asia, look at Hong Kong and Singapore. They are welcoming crypto, they are welcoming Bitcoin. And this is a very good development, which if you are interested in this investment, you have to take a look, you have to, focus on, okay? And to me, as I said, technology will only go forward, and blockchain and this cryptocurrency will never go back. Let's go forward, okay? So I'm not going to give you a target level for Bitcoin. I know that many YouTubers, many bloggers, they would like to say, hey, 100,000 or a million, blah, blah, blah. And I would say, no, I won't give any target on this one because this one is very volatile. But I can only say, in the long run, I'm bullish on this one. If you are interested in the crypto, in Bitcoin, the following 3 stocks, US stocks, you may be interested also. Coinbase, well, this is 2021 high, 400, over 400. And then last year, done. And then this is very, very frustrating. Okay, down 86% from 2022 high. But year to date, it rebound 82%. It just, well, all these stocks, they just follow Bitcoin. Can you see that? Okay. And okay, another one, Marathon Digital, Mara, M-A-R-A. I can see that there is a CFD in the Phillip platform for this stock and also for other related stocks. Okay, down heavily also, nearly 90%. However, year to date, this stock is up 200%. Okay, very volatile. That's why I'm not going to give you a target price. Okay, and Riot platforms. Okay, similar. And this is the best performing crypto mining, Bitcoin mining stock, up 250% year to date. Okay, now tech stocks. Okay, how about bank stocks? Some I have received some inquiries, some questions about bank stocks. Well, for the past in March, I can say we are seeing the folding of Silicon Valley Bank, Silvergate Bank. It is a crypto-related bank, and Signature Bank in New York. And also, we are seeing some stress in the First Republic Bank in the US. They are all local region. We call them regional banks. They are not big banks. And in fact, you know, we are seeing that we are having some concerns about all these banks. However, we don't think there is a real disaster for banks in the US. You know what? At unnecessary time, the central bank of the US Federal Reserve, they will open the tape and flood the market with liquidity, and no bank crisis. There should be no banking crisis or banking disasters. However, regarding bank stocks, we are not very bullish because, as you can see, Bank of America, this chart, not very good. The momentum compared to those stocks, the tech stock I mentioned before, it is not a very good choice. If you are going to choose some stocks, for invest, you choose the fastest horse. We say we always choose the fastest horse to invest. Okay, this stock is showing downside momentum, and well, I won't say it is our opportunity. Do you agree? And also you can see Citigroup, okay, and trading range. Okay, I will say that it is not a fast horse. Do you agree? Okay, so how about some Hong Kong or China stocks? And Tencent, a big giant tech stock listed in Hong Kong, and quite good. And the rebound is now in a consolidating state. If we break about this day, we can see the bullish trend will continue. 480 is the second target, upside target we have set currently. Okay, see if we can break above this consolidating pattern. Okay, I know many of you are also very interested in Alibaba Group. Okay, it has stopped a downtrend and now in a trading range. However, and I do not like the momentum for this stock. It seems to be going nowhere. Okay, same saying that if you are going to invest in tech stock, invest in those fast horse. Okay, and also I want to have a word or two on Chinese stocks, and we are seeing that the China and U.S. relationship, I can say still unfortunately in a frozen state. Okay, in frozen state. And compare Chinese stocks and U.S. stocks, we can see that the Chinese stocks are more prone to policy, policy within mainland China. Okay, so sometimes it is hard to follow the policy, and which will affect the share price greatly. At the same time, when we talk about the U.S.-China relationship is in a frozen state, and we are seeing more and more U.S. action against Chinese company, particularly Chinese tech company. So that is the tricky part. And if you are investing in Chinese tech stocks, just like Alibaba or Tencent, you have to face policy risk from China. At the same time, you have to face policy risk from the US. So comparing this the situation with the US stocks, would you like to play the US tech stock more? Okay, so this is a kind of insight that I will bring forward to you. And yeah, I remember I start talking about the China-US relationship for several years in this series of webinar, and sadly, I haven't seen any improvement within the two superpowers. Okay, and let's hope for the best. And meanwhile, we talk about Forex. Okay, US dollar. You see this the previous rebound failed, and it remained kept the declining 20-week moving average. Okay, so meanwhile, we are seeing a consolidation of the US dollar. It keeps consolidating. And I mentioned before in the webinar that whenever this kind of trend, this kind of US dollar strength for over a year, okay, for over a year and a half, when it change course to the downside, it will take a while. I mean, the downtrend, the consolidation will take a while. It has not finished, okay? But be careful. I'm for the long term, I am still don't be so pessimistic about the US dollar. Of course, for the short term, it will have some weakness, okay? But you know what? Still, the US is still the most powerful nation in the world, and its currency, you cannot look down on it, okay? But for short-term trading, yes, you can have some trading insight, okay? For this one, euro against the US dollar, very nice chart indeed. You see the moving average set up. You see the momentum. Still very good. Can you see that? And we are seeing the level of 1.1 will be secured. Okay, and yeah. Okay, on the upside. On the upside, another upside target is 1.165. Okay. British pound recently it has shown very impressive strength. It is going to break above the consolidation state and moving ahead. Okay. And for the UK, if you are also looking into the UK market, I want to stress against that. The UK, they are looking very deeply into the crypto market. They will, unlike the US, the UK, they will be pushing very favorable policies for the crypto currency market. So please watch out. Okay. So British pound, medium term, good, bullish. And at the same time, while we are seeing the US dollar consolidate, however, the US dollar against the Japanese yen, we are still quite looking, suggesting a bullish outlook. Why? Because you know that the Bank of Japan, Japan's central bank, has just get in their new management. The central bank chief. Sorry, I forget his name, but it is not important. The most important point is that the new central bank chiefs say they are going to maintain our ultra easy monetary policy. Okay, while they are going to keep the QE, quantitative easing. Okay, so this is the key point. This is the key point, and we are going to see the weakness of the Japanese yen going forward. Okay, we do not expect the yen to be strengthened anytime soon. That's why while the US dollar as a whole is consolidating still, dollar yen, we are still bullish. All right, so talking about US dollar, you should be interested in gold. All right, I know that you are interested in gold. In gold, which level you're looking at? We are looking at this level, 2070. Okay, it has been challenging this level 3 times. Let's see if it will succeed breaking above this level eventually. At this time when the US dollar is consolidating. Okay, and yeah, above 2070, we are going to 2,170. Okay, so yeah, this is for the commodity trading, and you can see that gold, just like Bitcoin, they are trading in inverse to the US dollar. We are seeing the weakness of US dollar recently, and recent uptrend are there for the gold and Bitcoin. Okay, so when we are going to see the Federal Reserve are not willing to increase interest rate anymore, well, we could see this kind of assets, Forex, gold, and Bitcoin to surge to the upside. Okay, so pretty much this all that I want to show you for today. So any question you want to ask, or we can exchange for some viewpoint? Oh, sorry, I finished 7:45. Now it is 7:55.
All right, we forgive you, Ming Lam. We have some questions on hand. Members of the audience, this is your chance to ask Ming Lam all the questions, burning questions that you have about the market, and maybe try and make sense of what's happening out there right now.
Yeah.
All right, Ming Lam, we're jumping to our first question. The first question is, why is Dow Jones 30 underperforming the NDX and SP 500?
Oh yeah, in fact the Dow Jones just comprise 40. 40 stocks. They have some legacy stocks. I mean the old can I use the word old? Just like bank stocks. And in the last 100, it is free of financial stock. Okay, so it is mainly tech stock. So for this year, and we see the powerful rebound of those technology stocks. That's why the last 100 is up 19% year to date, and the Dow Jones seems well going nowhere because it contains some typical or classic stocks which are not included in the last 100.
All right, Ming Lam, thank you for that. We have our next question. With the earning seasons happening now, and May being a bad month for stocks, what's your opinion on coming May and go away?
Sorry, I can't hear very well. Can we what?
Sorry. With the earning season happening now, May typically being a bad month for stocks, what's your opinion on sell in May and go away?
Well, you know what, Sui, I don't take into earnings very seriously because you know, stock markets are forward-looking, and the market is smarter than any investor participating in the market, including you and me. Very smart. And well, what we can see is the tech stock last 100 has been up 19% year to date, and it is a very remarkable rebound. And it has taken into account of all these. Well, we are talking about recession, which will affect earnings, of course, but no problem. The stock market say no problem. We have already taken that into account. So back to your question, the earnings to me, no worry, the market has already taken care about that. That is, it has in Chinese we say it has digested in the price already. So if you sell in May, I don't know. I think this year it should be. We are going to see a new uptrend forming this year. If you are selling, well, make sure you have the guts to get back in when the price are higher.
All right. So do you think So does this mean you don't think that okay, so okay, the question
I
is, do
agree
you think
that the earnings will be maybe disappointing, but after all, after some fluctuation, stock price, particularly tech stock price, are still up.
in the near term, where do you think the major US indices are headed?
Major US what?
Indices.
US major
The US indices like S&P 500, Nasdaq, and Dow
index.
Jones. Yeah.
You mean the level?
Generally, the general direction, do you think it's headed down because we are approaching very quickly approaching May?
You're asking about my opinion on the direction?
Yeah.
Yeah. Can I show you a stock, a chart, something?
Sure, go for it.
Can you see my chart?
Yes.
This chart is, as I mentioned, this is the most important macroeconomic chart in this webinar. As in fact, I'm not looking at earnings. I'm not looking at recession. I'm looking at liquidity around the world. Okay, if liquidity keep growing, increasing, S&P 500, Nasdaq 100, their direction is only one direction, upward direction.
Okay. So this allows you to track the liquidity levels, and it's very important for investors when it comes to tracking our investments.
Yes, sir.
So if the white bar is liquidity, the pink line, what is it showcasing here?
It is showcasing the M2 money supply of the major central banks in the world. Major central banks, including Federal Reserve, Bank of Japan, Bank of England, People's Bank of China. Okay, you can see that the highest mark is 104 trillion, something like this, US dollar.
All right, the next question is a crystal ball question. I hope you have it with you, beside you. When do you think is the next? When do you think is the last Fed rate hike?
The last one, okay, good question. Everyone could be the last one. People talking about they are going to raise another 25 basis point in May. Okay, that could probably be the last one. In fact, we thought the last one they made in March was already the last one, or in April was already the last one. So if it is the last one, it should be the second to the last one. And I think this question should be asked by some stock investor, right? And I have to repeat my theory again, that don't care too much about the Fed next move, because we are seeing that it is ending. Who tell us that they are ending the market? Less than 100, they are up 19% year to date. The index, the market, the price is telling us that the central bank is going to stop.
All right, members of the audience, we still have a little bit more time for some more questions, which I'll fire away at Ming Lam, and he'll give you some insights. All right, next question is from Alvin.
Yeah.
Do you think it is now time to buy tech stocks in the Bursa market?
I agree. If you are seeing pullbacks, just like as you say, when some stocks show the earnings, for example, Tesla, they released earning over last night, and I can see that pre-market it is down 6% something, and you can accumulate. I suggest, and I agree with you that we can accumulate, or in other words, buy on dips going forward this year. Okay, because you see, market has been very pessimistic. I showed you in past two webinars. Well, in Chinese, we say from extreme to extreme. We cannot be more pessimistic anymore. This is my opinion. So going forward, if you are going to see some favorite, the tech stocks that you like are pulling back, just like Tesla, down 6%, 10%. Think about it.
All right. We have the last question on hand. This is from Stephen.
Yes.
Stephen is asking, which market has more upside potential in the next 12 months, Ming Lam? Is it the US or China? Very interesting question.
I think you have the answer already. US, and as I mentioned, the China is well, what can I say? In a very bad relationship with US. I have no idea which one is wrong, which one is right. And but on the market side, I can still see the Wall Street has more power and to overcome all these drawbacks. But according to our experience, the Chinese stock market, Hong Kong stock market, when they see some unfavorable policy or some deterioration in the U.S.-China relation, well, the China and Hong Kong market, the Hong Kong stocks just drop harsh. So I still recommend US. Look at US. Okay.
All right, thank you so much, Ming Lam. And that's
Welcome.
all the time we have for questions. Rest assured that you can still send your questions in the survey form at the end of the webinar. Rest assured that we will direct them to Ming Lam so we can ensure that everyone gets their question answered. And if you have any
You're all welcome.
and if you have any queries about our ongoing promotions, you can send your questions in the survey form as well, and we'll be rest assured we'll address them for you. Okay, till our next live webinar, we hope today's session has been useful. Thank you once again, Ming Lam, for walking us through the various insights that you always bring to us every time.
Thank you for having me.
And thank you once again to Rebecca for walking us through the trading tools that we have. And thank you for being a wonderful audience. And we really, really loved all the great questions that you had today. Thank you and have a good night. And stay tuned for our next webinar.
Thank you. See you.